Good afternoon. We're going to go over the watch list this week of 5/25/2020 for options, and I have Baidu up first. I would keep an eye on Baidu. There's talk that they're wanting to delist from the stock exchange, and most China stocks are going to be very iffy and sketchy, so I would not be going long or term on these China names in case something does happen and the tensions escalate. There's a lot of unknown variables with China right now, with the stocks getting delisted from the stock exchange, the Taiwan, Hong Kong. I mean, their coronavirus, pointing fingers. I mean, there is a lot of unknowns and anything can happen. And basically, if the get off track from Baidu for a second. If there's not a catalyst, that we're probably going to end up chopping another week, or we're going to, algos and the Fed will push us higher unless something happens. So I would anticipate another chop week or low volatility week unless something seems to happen. Something's got to happen. So it's just a matter of when, and be ready when it does happen. But until then, Baidu, I mean, with the news with China, I'm looking for day trades only. Do not swing overnight in case they just up and say, okay, we're going to delist tomorrow, we're going to delist Friday or whatever. You don't want to be holding any China stocks, so don't only day trades. But you get Baidu under 102.50. I mean, it's going to go to 100, and 100's a big psychological number. And usually when things get below 100, the algos step in and they stop buying because they know anything under 100 is a big psychological number, and it could be a quick bounce. So I don't like Baidu long because of it talking about delisting in the China situation. But I'm going to kind of be talking bullish on Baba, but we'll get to that in a minute. But as far as chart-wise, I think that Baidu is going to go to 100, maybe even lower. I mean, it can definitely get to the 95 area if it does. So I'm not a big fan of Baba for the short side. Win is another one. Casinos are opening up, but fears of a second wave and all these beaches are getting jam packed. So I would be very, very careful with longing the casinos and Win, but I like it for short. I mean, if it gets under the 77.50 area, I think it retests to 74. The last time I tried to trade Win, the options the spreads were pretty nasty, so that will be depending on how the spreads are, even if it moves down. So I just want to point that out. Facebook is another one. It's showing up on my divergence scanners. I mean, Facebook I think is going to go to 300 by the end of the year, but I mean, it could pull back, but the market is up 36 points right now, the futures is, so it could keep pushing. I mean, the only reason I have it on my short side list is because for a possible pullback on a divergence here on the daily, but like I said over and over, divergences can keep going and going and going. They can last for hours, days, and weeks, even months. So it doesn't mean anything, but the RSI is like way up. It's like 77. So I wouldn't be a bit surprised if we have a big gap up when we sell off tomorrow on the market. So that's what I'll be watching for on Facebook. Google, I mean, same thing. I mean, Google's actually looks like it's poised to break out. I mean, fill the gap. I mean, it could, but there's divergence going on. I mean, if I was to say, okay, I would go for the gap fill. Once the gap gets filled, then I would look for short on the gap fill. But I don't usually trade Google because of the spreads are nasty and the prices are kind of high. So yeah, Google could end up filling the gap before pulling back, but you got to also be aware if there's a big divergence and it could just start diving on you. So I'm not going to touch Google. I just want to put it out on the watch list just so that people that do trade it, that they can grab it. But I think that best case scenario, I can get to 1500 before it dumps, but we'll see. Walmart has been like really tough to trade the last week. I mean, it's been choppy. And it sold off from the earnings. It's been choppy, and you know, I've been watching it over 125, and it's just like on the hourly right here, it's just chopping downwards and a downward pressure. So I mean, it gets below 124, and can get to 122, but we'll have to see how retail's doing. Even though shops are opening up, the stocks that have been doing really, really well during the pandemic and the closures, they're going to end up probably selling off because they're going to have competition now, and they'll lose a lot of business because of people are going to be going out to other stores. So I mean, some of the retail stores like Walmart could feel the pain from that. So I would definitely watch Walmart under let's see, under 124 for a 122 push. Walmart's been like I said, Walmart's been like tricky all week last week, so I got stopped out, I think once or something. I don't remember. I know I traded a couple times. Let's see, Cat is another one on the short side I'd be watching. Now, when I say short side and stuff like that, is that when the market's weak, I'm going to look at these particular stocks for a short. So they start to look weak, or they have divergences in place. So when the market does get weak, those are the ones I'm going to jump on. And Cat right here, you get like a descending channel right here. So I mean, it's at the top of this channel, and I don't see the market really holding up. I mean, I know it's going to gap up, and it's going to get pushed to 300, but I see a small pullback, nothing substantial. And I think a lot of these stocks, because a lot of them have the same kind of setup where it's like gapped up and they've been consolidating. I mean, it's got a head and shoulders right here on Cat, so I would watch it below 111 and for a gap fill on Cat. So I definitely like Cat on the short side. It doesn't have enough momentum to break out. So that's what I have on the short side. Now on the other side, I have Roku for a bullish. Now Roku has been like going down, so I mean, it could come down here and test the 102, the 100 area, and if it does, that is where I would buy. But I do like it over the 120, and 120 seems to have been like the magic number last week. I mean, I had so many stocks where I had was waiting for a 120 breakout. I think Walmart was one of them too, wasn't it? No, there was 125. There was another one I was watching last week. That just, maybe it was Disney. It was just ironically 120 was just a magic number for a few stocks, and they couldn't break out. It was really weird. But anyways, if it gets to 100 and it gets down to this gap support right here, I would definitely look to go long or over 119, over 120 for Roku. Actually, you know what? Over 110, you don't want to wait for it to get up there. I mean, it could probably go from 110 to 120 and pull back, because it's been pretty choppy in that area. So that's what I would do on Roku. Watch Roku for a bounce. BA, I think BA is going to be one of my top watches. I mean, you get this little descending triangle right here that it broke out of, and it's retesting the middle Celt right there on the daily. So I do definitely like, I mean, you can see right here on the hourly, it came down, retested the middle Celt on the hourly right here at the 135, 36 area, and it gets over this 138, it's going to pop, and I think it's going to get to 150, and it gets to 150, I mean, it's got room from 150 all the way up to 185. So I would imagine when things start opening up, airlines are going to open up, they're going to start getting busier and stuff like that. So I would definitely keep an eye on Boeing. Target, I have Target on there. Now, Target has been going down, and like with Walmart, but the thing I like about Target is that it's retesting this area right here. It's 118. You can filled the gap, it came back and retested. It could go to the middle Celt, which is the 116.50, and bounce off that. Usually what happens is, as you can see right here, when they go up to the top of the Celt, they come back and retest the middle, and then it bounces. Now, it's already done it once right there. This could be number 2. So I would watch for a bounce on target around this 116.50 area, and if it does bounce, you can get, I think it's going to go back to the 125. So I would watch Target. I'm not really too excited about Target, but I definitely want to watch it. Disney is another one. I put out a chart earlier on Twitter. I mean, it's got like a little triangle right here, symmetrical triangle right here on the daily. And I mean, you could say there's like a head and shoulders, left shoulder, head, and right shoulder. You could say that, but Disney is getting ready to make a big move. I don't know if it's going to go up or down. It's going to depend on what happens with the market. I mean, a lot of these stocks are going to be all dependent, mostly dependent on the direction of the market. So if something does come out that spooks the market sells off, and I would not be going long on these. Except for maybe Walmart. For some reason, Walmart seems to go against SPY. So when SPY does bad, Walmart seems to do good. So I would definitely watch for that. But Disney, I would watch for over the one. Yeah, it was Disney was 120. That's what it was. Disney. I remember the taking that breakout right there. Over 119, and if it gets over the 120, which has been a tough area, I mean, it could get all the way up to right up here to the gap support, gap resistance, sorry, at 134.50. So that's what I'd be watching for Diz. As long as the market's strong and there's some kind of catalyst to get the market going up. But the problem is right now there's no volatility and the Fed's pushing it. So that's what's making it hard to trade, is all the chop and the overnight gap ups, and you get these big gap ups, and you get when the market opens, it's nothing but small trading ranges, and it's very difficult to trade. So PEP, Pepsi is probably my second biggest watch besides BA, and the reason I like Pepsi is, I mean, you look at this channel it's in. It gets below 130, it gets up into the 138 area, above 137. So this is a good support area right here in the daily for 130 for a bounce. So if it gets over 130, 131 on Pepsi, I would take it for a long for the push to over 135. I definitely like Pepsi right this week, and it's really cheap on options too. Nvidia is another one. Now Nvidia, I mean, it's just a lot of these stocks look like these because they're following the market. I mean, they popped up and they're just trading in this small range for the last week. So I mean, Nvidia is just like a monster like shop. It could just keep going. So I mean, over 365. What does the weekly look like? I think this is all-time highs. Yeah, and look at that, 182. I mean, it's gone up 100% in the last couple months. But Nvidia did show up on my divergent scanner too, but I'm not too concerned with that. It's been really strong, like Facebook, but it's probably going to get pushed. So if the market's strong, Nvidia is going to get pushed. And sometimes when the market's weak or choppy, Nvidia is still strong. So I would definitely keep an eye on Nvidia over the 364 area for a push to 370, because these stocks love these big round numbers. So that's why I think it'll go to 370. If it doesn't gap up to 370 tomorrow, I mean, the market ES Futures is up 36 points right now. So another one is Baba. I know it's contradicting my Baidu because it's Chinese, but I mean, you get this big gap down, and if the market's strong and there's no drama with China, that it'll probably end up gapping up and probably fill the gap. So I would watch it for a gap fill, a day trade only. I would not go long for a swing. I would look for only a gap fill on Baba. If it can get over the 202.50 area right there, get over that for a push to fill the gap. And that's it. I mean, like I said, do not swing it. It's a Chinese stock. Home Depot. Home Depot struggled a little bit on their earnings. I mean, it pulled back, but it's chopping. It's retail. I mean, people are getting out, buying things, going to Home Depot for their home repair and gardening and stuff like that. So I would imagine that Home Depot is going to start getting busier. even though they had curbside pickup and stuff like that, and they did pretty well during the pandemic, but I think that they're going to end up doing better. We should see. If it does, I would watch for a push over the 243 for a push to 250. And we test that now. Let's see if that's all-time high. Yeah, see right there, it's double topped on the weekly, so it could pull back. Whoop, what did I do? So it did double top right here, and it had like a little evening star, but it held pretty well in this area, and if it does end up gapping up, it's probably going to break out to all-time highs. So I would definitely watch Home Depot. Apple's opening all its stores. You know, it's probably going to go back to all-time highs. It's going to follow the market, and let's see if that is what is all-time highs. Yeah, 327 is what I thought. But so yeah, I would watch Apple over 320 for a push to 330 this week if the market's strong. If it doesn't gap up, but I mean, if there's a huge gap up overnight, I would wait for a pullback, because I think it will probably pull back at open. So the last one I have is CLX, which is Clorox, and the reason I'm bringing this up is, you know, we are at the middle cal underneath it, and usually that's bearish, but I mean, down here it went under and it popped back up, and with all these beaches being packed and probably a high probability of a bigger second wave of coronavirus, COVID-19, whatever, that Clorox is probably going to end up popping again. Everybody grabbing bleach and cleaner and preparing. I mean, we get these mass gatherings happening all over the United States, all over the world, that's just going to make this thing go into overdrive for a second wave. And the stocks that did well during the first wave, they're going to do well again over the second. You know, like if there's a lockdown, I don't know if they're going to bring out another lockdown. Trump says he's not going to do a lockdown, but Clorox is definitely going to be one that's going to benefit from this if this does break out. We'll have to see what the numbers look like over the next week or two with all these gatherings going on, and if it explodes or not. So yeah, I would definitely keep an eye on Clorox over 200 for push to 210. So that's going to be it. And like I said, you know, throughout the video, I mean, it's going to be all dependent on what happens this week with the market. If the market doesn't have any catalysts, it's either going to be very tight range, choppy, with big gap ups, or just small gap ups and tight range. The Fed's going to keep pushing it as long as it can. I mean, until something happens, nothing's going to change. The Fed's going to keep pushing it up, and it's going to be choppy. So we need some kind of catalyst to kick it into overdrive, to make us pop or make us drop, something to give us a direction, because this sideways action is very tricky to trade. So I would be very careful this week, and I'd be very careful this week and play small, because it could be another choppy week, because today's a holiday and it's going to be a 4-day week, so it may not be that much action. So just play small, play smart. Thank you.